Good morning. This is the Elliott Wave weekly update for gold, silver, and platinum, being recorded on Sunday, April the 27th at 10:20 a.m. Pacific Daylight Time. The first thing I'm going to do is apologize because I've had a massive breakdown, just a shutout from my primary computer where I have a lot of my charts are stored, a lot of the workups are stored. Even though that's through Thinkorswim, I'm on my laptop and it's not pulling up the same long-term charts that I always have included within my analysis. For example, I can go to the maximum monthly and it's only showing me back to 2011. So I apologize for the more condensed view that I have to give today to where I'm going to start. So basically, I'm actually starting pretty much from the October 2022 low. And that what we're working on is five waves up. And so actually, if I just put that down there, we're in the minor third wave. And within that, we're in the minute third wave. And within that, we likely have just finished the minuet third wave at that recent highs above 3,500. So as I continue this conversation, I continue to say that this particular upside move is, in terms of its intensity, massive to me. In terms of its growth, massive to me. And in that we are in new all-time record highs each time we move above the past one. So that just continues to grow. And the wave pattern itself continues to suggest we got a ways to go before we see a much, much larger corrective phase come into play. So right now, what if I can remember what my brain has to remember, I just go back to previous weekly updates and you'll see that long-term chart, which includes the 1980 high, which includes the 2011 high, which 2011 high. So we have exceeded both of those substantially. And within it, in gold, I believe I'm counting this as a cycle degree C wave up. Now, that doesn't suggest corrective. What it suggests is like that's as far as I go, in that my impulse waves are still five waves, but the market, to me, although it's been disputed with me, that the gold, and this is by a very prominent, for one of my teachers actually, and who also has information and charts and built charts in gold that go back centuries. So that it was brought to my attention that no, gold has the potential to put in an impulsive move. In other words, we could be counting from a supercycle or a grand supercycle level within gold. Now, I'm not privy to that count. I'm going to try to get it out of this person. And so that's going to help me to develop that super large picture in gold. But for right now, I'm very steady in how I'm counting it, and that what we are in is a subdividing third wave up. And even within that, the one thing that I learned about gold and a lot of the precious metals, that the longest and the strongest wave on an Elliott wave basis has tended to be the fifth wave. And if we're still in the third, I'm noticing that within these waves, each time we get to a fifth, it extends even more. So whether that's a fifth on a minuet, or a fifth on a minute, or a fifth on a minor, or a fifth on a sub minuet, we're getting these extensions. One of them just occurred and still is occurring within, let's go here, the third minuet third wave. So minuet wave three of minute wave three. It subdivided there was one, two, three, four. It's subdivided four times within the minuet third wave, or at least three. I'm counting this as just the wave minuet. There's subdivision one, subdivision two, subdivision three. And even inside that one, the wave pattern was just like, wow, in these sub levels, still had massive power to push this metal higher. Now, I can step aside and I can say what continues, in my view, to fuel gold is, of course, the tariff situations and, more importantly, the dollar. The US dollar has been sold and continues to get sold. It is now trading for a little bit longer period of time below 100 in the dollar index, below 100, and projects likely that it could continue. I mean, I've done some work here. Let's see if I can pull up that chart and see what I get in terms of the max. So right there you can see primary B wave. So we're in a primary C wave down. And actually, I think either I got to mark this as intermediate wave one, intermediate wave two, because we're in a primary C wave, and that we're inside of the intermediate third wave. So regardless of how I'm actually labeling it, let's just understand we're in a third wave and it's subdividing. And right now it's subdivided at least twice. And this might be off in terms of it. But the market, excuse me, did put in a decent rally last week. Now, off of the lows, put in a decent rally, but failed to get back above 100. I mean, I think it ticked above it quickly. Let me just double check. No, it did not. Got close, did not break back above 100. And now continues to slide lower. Not as quickly, but we'll see what happens. Now, what we've got coming up is a cluster. This is in the dollar, a cluster of support around the 95, from 95.55 down to actually 94.64 or 54. So those are pretty strong downside numbers. And I'm looking that maybe that just finishes this minute third wave coming off. So the fifth wave in progress now. If anything, maybe I can put the 5 there, and we're going to come up in a minute. That would put also the minute third wave there, and we're coming up in a minute wave 4. Maybe we get back above 100. If we do, we're likely going to get a correction in gold. That little bit deeper correction, depending on how high we can get. So let me go back over to gold. So purpose of all that, as I'm showing you what I feel the relationship between the dollar and its moves and gold. So weaker dollar, stronger gold. And also tied into this is our treasury market, the 30-year bond, the 10-year note, and how they are being sold by countries, other countries that hold our debt. The one of most importance right now to me is China. China continues to sell U.S. debt. I have no idea if they're over. I have no idea what the extended plan is. They're not, I think, telling anybody. But they are selling the U.S. bonds. And then taking those dollars that they receive and selling them into yuan and taking the yuan back into China. I also know that Canada has been selling the US dollar because of the trade wars. The European Union may be selling US dollars because of the trade wars. I've also discussed how China and other countries would like to dethrone the United States from having the distinction of having the world's currency of trade. And that has been the US dollar for many, many, many years. That it's the dollar that countries have to hold a reserve in order to trade, i.e., in crude oil, in gold, and other products in other markets. China, number one, would love to see that change, as would Russia, as would many other countries. And now, because they have to deal with the fluctuations in the dollar as well, and how that affects their own currencies versus you got to hold these dollars. Well, now you're losing value, et cetera. Now you're gaining value, you're using value in your own. So I'm sure there's a lot that the stability of the dollar was always a major factor in keeping it as the currency of trade. Well, stability of the United States has actually been pulled into question. So in terms of what the effect of all this is going to have on gold, if we put all those together, we're not done with the upside. That's my stance. Um, but they continue as well to kind of shift some of this narrative over the dominance in gold as a safe haven, as a when things are in trouble elsewhere, money gets moved into gold, and they're trying to allow Bitcoin. This is the latest thing. And I think a lot of it's coming from our administration because, hey, some of the leaders there have their own meme coins and they're trying to sell them so that they can make money. It's a kind of a very strange situation. But here we are. And all these things that, hey, we've not really confronted this type of stuff before. Situations. What do we do? Situations. Where do we put our money? Situations. And that continues to flux and flow back and forth. But I continue to see strength in the precious metals. So back to gold. I'm going to come down off of this weekly chart. So minute 3, within minor 3, within intermediate, I believe, 3. So we're still got a lot of room to push higher before all of these sequences and all of these degrees are finished. Now, bringing it all the way down. So here we have minute wave 3. I'm going to drop it down pretty quickly. Let's go look at the daily chart. And there it was at that high at 34.76. So I still believe definitely at this level. I thought we had a possibility where gold could pop and get itself above 3,500 before it actually began a stronger correction. That kind of seems to have left 34.76 as that high. We're now correcting in a minuet fourth wave, which is going to be an ABC down. So let's start to bring this in. Now, here's the ticket. We get, I can put up our fibs, right? Which I didn't. I had to go all the way back out to that monthly chart to find the low of minuet wave 2 so I can connect them. So that's going to make the target areas for these corrections much deeper. And as I've been talking, I don't believe that gold is going to actually retrace now back to 2,900 or 2,700, which is just 382 and 50% for a fourth wave. Now, if I'm looking at the minuet, then I've got to go down one to this sub minuet, which is still out of the picture here, to find that one. So what I've done is these are the insides. So here is the first one that I believe, I'm trying to think if that was the sub. I think it might have been, which we've reached. See if that's 4 and that's 5. Yeah, I think it is. So this being the fourth wave, somehow here, it has to be. It's kind of very confusing because I've got so many different layers. But here was one fourth wave. That was the first one. Here's the second fourth wave. Here's the third fourth wave, all of which I think can be candidates. Now this fourth wave pulls it way down. This fourth wave, since we've already met this one, I think could be next. We've got this one inside here. And so we've gotten as low as 32.71. I'm going to take this off the daily. I'm going to bring it down to the hourly so we can take a look inside. So here was that 4. We kind of rolling around right by it, not necessarily dropping too far below it. Here's the next 4, which sits at 2,900. And that actually, that's not too far away from 2907, which would be for the minuet wave 4. But trying to connect it, we got 1, 2, 3/4. This one I really wouldn't use, but then this one I thought I really wouldn't use, but here I am. Here I am. So 4, we're reaching it. But I'm taking that this is A, B, C for the B wave, and that we're going to come back down again, probably of equal to here. Now let's say that we get back up pretty much to this flat level, because this is just a guesstimate, folks. I'm not really looking at anything too great. I'm just going to put it up to that resistance to think. 100% 3150. Okay, so we're kind of in between 1.618 30, 3021, closer to this level, closer to that level. But that's 1.618 on a drop. And it would be, in terms of the whole rally, or just lately, it'd be a fairly large correction in gold. Largest ones that we've seen in a while. Let's put it that way. Even though when this thing was dropping, there were a couple of days it was like this one, I think was down 100. Recovered, but still down 100. Look at the gaps we get. Lots of gaps where the market just reacts. Once it stops trading, and then when it restarts, it's just like gapping all over the place. So the other point that I'm making is that what we're also seeing is increased volatility. Increased volatility. And that is usually going to be measured by the options, and it's usually measured by the puts. But I don't think the puts are really in demand, but they may be when we start to see a stronger down day. They're jumping in and like, oh, start protecting. So, but volatility, I think, has increased. And basically, what I want to do is I just want to jump over and take a look at the GLD, which is actually, I wanted to do it here. Sorry. Yep, GLD. And then I'm going to come down to option statistics. See, it's not actually all that gigantic. But the current IV percentile is 66, and the implied is 20, just under 24. Not knowing what actually the norm is, I usually don't hone in on volatility in gold because I don't trade the options. But I'm seeing it. I'm seeing that we're getting more volatility in gold. I don't want the GLD. Let's go back to our chart. So I find gold to be continuing to be fascinating to me. Now I'm leaving this up as a guesstimate, but that's on the basis that we rally back up to 3360. And the way gold's moving, it's not all that much. It's $57 higher. We can get that this afternoon when Globex reopens. So again, and then maybe another down leg. If we continue to move higher, let me take this off. That would be 3360, 61, and then the next is 3413. And if anything, it'd be weird, but I'd probably, it's just too sketchy. I can't say, okay, that's going to be the whole correction, and now we're just building our way back up, because this is very much 3, and this is very much looks like it could be turning into a 5, which should also suggest we might do a little dip below 3273, 3274 before we turn and put another leg up. If not, then ABC A, ABC B, and we're coming up in a small 5 to put in a C wave to complete this internal B wave of that 4th wave. And if that's the case, then we're going to get a C wave down. And guess what sticks out right there, blinking its lights? 3204, which on the hourly chart is the 200 day or 200 period moving average. And that kind of brings us into this four. So interesting. Day by day. How do we want to trade it? On a daily basis, actually, it's kind of gotten ingrained in me that, me being a day trader versus a position trader, if anything, I would want to be long in gold. And I think a lot of that could be controlled and helped by trading options. GLD, GLD options, they trade pretty well. Two-sided market, pretty liquid. So you can get in, you can get out. But there's ways to build a position that you can put spreads on, et cetera, and participate in these massive, wonderful moves. Um, just being long the future, it works, but how deep are them pockets? So, because again, when this thing decides it's going to correct and it just drops out of the sky, don't forget, these are historic new highs. We've never been up here before. So, what's to say? How far are we going to drop? Well, where's there going to be support? Well, if there wasn't a whole lot of resistance on the way up, I can't imagine there's going to be a lot of support on the way down. But we find it and we bounce. So again, until all of these levels can be greater or more efficiently established, I think our trading can be very wild. We can get a lot of crazy moves in gold. If you've been long gold or if you have gold that's in storage, hold on to it. I don't think the world's economic problems have been solved. I certainly do not believe that all of this that's happening within the United States is anywhere near being resolved. And then, of course, there's the blowback, there's the payback, there's the what are the circumstances? You did this. This is what the United States has done as a government, and this is a situation that's created. Well, we just kind of go, geez, sorry. Let's go back to the way it was. I don't think. I think what happens on an international level is really also being put into gold. What does holding gold state? The good faith and credit of the United States is going up in a big old pocket of smoke. Maybe. I don't know. I don't think any of us do. So we're just kind of being held hostage to how we should trade or what can we do to protect our own investments, to protect our own selves. So day by day is how I'm taking it, folks. So anyway, just to kind of cap off gold, I still believe we still have many more upside targets to reach. And these are all associated with this degree, um, which is done. No, that's the minor degree, excuse me. That's even not that color. It's the minor degree. And so this one been taken out. So I have to start cleaning this one up because that's been gone. We got 1882 and then the rest up here. So I'm going to keep those. So we'll take that out. Our next one on a minor degree takes us up to 3625 in that area. On the minute degree, which is the next level up, right? Minuet wave 3, minuet wave 4, minuet wave 5, which would then complete minute wave 3, 3507. What do we got above that? That's 3.618. Wow. Wow. Let me just go and put some other stuff in there. And we're going to go here, 3.882. And we're going to go like that. 3630. I'm going to leave it at that level because that's also a minor degree level. Wow. And you see, look at just 3.618, 3.882, 4.236. In order to really come to these, we just have to keep multiplying on a Fibonacci basis. We just multiply. And that's how you get these higher levels. And you'll notice it's like many times, even in some of the equity markets, just because of the size of things, I've been using 4.618, 5.618, 6.618, and because the moves are extraordinary, but keeping it in a fib basis. So right now, I think that it's pretty much a fair statement that 3,500 should be reached and 3,600 most likely before we get the next larger pullback. If we get up to here and finish that minute third wave, well, we're then in a minute fourth wave, which is going to be 1 degree greater in a correction than this one, than we're currently doing. And depending on what's happening in our world, I think will also guide us as to how deep it's going to happen in our precious metals. Moving averages, they're all playing quite along, but our longer term ones still, look at every last one pointing strongly higher. Look at the 50. When's the last time you saw a 50-period moving average on a weekly chart? And 200 with the slope as strong as these are. We're not done yet. Right, let's go over and take a look at silver. Silver did pick up a little bit. I was kind of pleased a little bit, but still with inside, I believe we're in the minor fifth wave up. I believe that is forming a diagonal, which means waves 1, 2, 3, 4, and 5 will be in three waves. Wave 4 it was an ABC, it should have been. Wave 3, ABC, as it is. Wave 2, ABC, and wave 1, ABC. So the diagonal continues to play out. Now, what am I looking for up at that top? Well, I'm looking for an intermediate C wave. And that projects up here. 39, almost 40 to 42.65. Now, let me see if I can get one. I want to go to my max available, and I want to go to my monthly and see what I get. Not bad, 2022 or 2011. So again, I think here, using the more modern ways to label corrections, if this is W, right? X, and this is a big Y, and we're in the stem of the Y. So my thought process has been that we should be getting ready to go in a fifth wave, like Yahoo Mountain Dew, and just get up here. Now, if it gets up here and we put a Y, then I'm going to be looking for another ABC down. So, and put another X, and then maybe we would do a Z going up. It's a new way they do it, but it is fittingly here. And this W goes all the way back to show the 1980 high. Again, I'm so sorry that I can't pull these open in this computer. It's a laptop. So, but it goes all the way back. And so then we have that 1980 high, and then we have that all the way, and that was at $50. And we have all that serious drop where I think we were way down there on the price of silver. And then we had the additional. So here was 19. I'm just pointing it within the W. Here was 1980. Here was, and there was a little intervening rally. And then we had this one that's here. That's 2011. Didn't take out 50, but got pretty dang close. And then we have an X wave coming down, which is a 3. And then we have, this is what we're building, an A, B, C up for Y. But counting it, there's the A, there's the B, puts us in a C wave, which is going to be 5 waves of minor degree, and it's forming its own triangle. So the only other way I can count this is that this is minor wave 1 of intermediate wave C, and this all has to come down by 1 degree, that it's a minute wave, 5 waves up. Right now I'm leaving it at minor. There's the 3, there's the 4. Let's bring it back down. Let's look at it on the daily. So there's the three, there's the four, and now we've got this beautiful. I mean, it came off of over last week and it continued to rally, but just like so many markets, particularly, between silver and gold, when silver decides it's going to correct, it's almost like somebody pulls out the plug. It's like, oh, we don't have any support. And it kind of is amazing because it's like, well, where were the people that wanted to go buy this up to 33.75 and then they step away and let it drop over $1? So it's kind of interesting to watch, not so interesting to play. And as all of you are likely aware, if you trade silver and you're trading in the future, the margin is huge. It's gigantic. And that's a reflection of the volatility of what goes on. So let me take this down and let's take a look at it on the 4-hour chart and see what we got. I've been trying to just count what was inside here because I wanted to see, okay, if we're in a five-way structure up, how far are we into it? So I kind of went one, two, and then one, two, three, four, five. So I just think we finished the three. Remember, there's my first upside target. So degree, I'm leaving open right now, but I'm counting it one, two, and this is a three. So we have a fourth wave correction. It already came down, got pretty close to that 0.236 absolute minimum. ABC could be good. Don't know. So, and it's kind of on a 4-hour chart bumping into support from the 50 period moving average, and the 200 is sitting right below it at 32.55. So we've got some at least moving average support and some fib support. And then if it breaks through there, we have additional fib support at 32 and 6 cents. And that would be 382. So if this is a small four, that would be the perfect stopping point. Our RSI still pretty strong, actually right in the middle, but kind of going flat a little bit, but still could be heading lower. So I'm going to count this. Now, as a fourth wave, I'm not looking for 618, but silver has a tendency to just kick itself in the teeth. Like that was a big gap. That was a big gap. And those are big drops as gold was kind of falling out of bed. And there was the one day it was down 100, but then it always recovered. And silver tends not to. Interesting concept. So here we are coming down. 1, 2, 1, 2, 3, 4, 5. Okay, so I'm putting a 3 up there. A, B, C, A. We do a little B, and we come back down into C. There's our markers. I'm leaving 618 because it just tends to, silver will just out of the blue kind of throw it out there. But I would not really be interested in seeing it below 31, 58, 58, 50, 60, somewhere in there. But actually, I'm hoping the 32 even contains any additional downside selling. And then we start to rally again in a fifth wave. And as we've noticed, a lot of the fifth waves in the precious metals have been the ones that like get up and go, either to the upside or the downside. This one would be to the upside. Our first marker is 36.58. What would be nice? Well, I got another one out there at 42. So again, these are for the intermediate degree, which is the C wave going up. And this is a fifth wave. So that would be a good marker. This one's probably the stronger because we get that fifth wave kind of coming up into here. So if we get past that with some strength, but there is our, here's the other thing. If this is going to come up as in 5 waves, it could be just A of 5. And then we get a little bit bigger B of 5, and then we get that C of 5 and still end up here. So maybe the A of 5 gets here, we correct again, and then in a larger B wave, and then that C wave gets up here. So in other words, I still think that there's a lot of rally left in the precious metals, particularly in gold and silver. And so I do think there's a fair chance that silver can get back above 40. Will silver go to another new all-time high? Initially, I would say no. But that's not fair to silver or anything else because things get serious enough and people are frightened enough, maybe the silver will become the choice. You know, if gold is really out of reach, next down the line, they'll go for silver, right? And that would all go in with the good faith and credit of the United States just being flattened, run over by a semi, whatever words you want to use. I think if something like that were to happen, where we see the bonds really collapse, where we see the dollar really collapse, well, bingo. Where are you going to put your money? Well, what can barter with when when your paper, your fiat has no bite anymore? You're going to go to gold and silver. All right. So don't see that, but you never know. Um, Moving averages, they're doing okay. Not as strong as gold, but they are doing okay. So I'm still okay here. Eventually, this is where I think we go. Do I have additional? Yeah, I got up at 47. And that would be the outlier because we have that 49 to 50. That's pretty been capping off the markets for decades, right? Since 1980. Here we are in 2025. So it's 45 years that it's held. 50 is like this big line that everybody dares. Could it? Yes. On a Fibonacci basis, yes. Yes, it could. Why not? But the reality is, what's going to drive it up there? And I think that would be the part that most of us don't want to deal with. Another conversation. All right, so let's go over and take a look at platinum. Here we have did 2 days of great rally, and then it went a little drop. And here we are on the 3 year. I think I had the 5 year up there. The week, let's go to 5 and see if I can rebuild that one. There you go. So this is still pretty good. I like it. Platinum cleaned up, put it in that intermediate B wave low, and that was at 902 back on April the 7th. And from that, we've done powerhouse up, and now we're doing a little bit of a pullback. But on this whole thing, we have intermediate wave A, intermediate wave B. We're in an intermediate C wave going up, and just some basic fibs from the bottom of A to the top of A to the bottom and low of B, which was a triangle. So that gives us much higher levels than maybe others would be kind of looking for. But here they are, just straight fibs. 0.236, 1,078, 382, 1189, 50%, 1278, 1278. This was the high was 1287 on the A wave. It has been higher, of course, but that would be pretty strong. The C wave should take that out. That puts us here to here. And this is a 5 year chart. So is it going to take another 5 years? Maybe. But it's saying that the prices of platinum should continue to rally over the mid to long term. That's what it's saying. And on the basis that we got a 5 wave A, we got a diagonal or just a triangle B, and we should now get 5 waves. Still yet to happen, though. We're waiting for the start of this to get us up and out. But because this is a 5 year weekly chart, well, we're only in the third week after coming off the low. And we did pretty good. We did it pretty good. We rallied, we did get back above. We got up to 984, and that's after so almost 100 points. So again, I think platinum's doing okay. Bringing it down now, if we take a look at that daily chart, same kind of deal, right? If I've got 1, 2, 3, this is a 4, and we're into the 5, and that's 1, and that's a 2, it's got to hold. Got to hold right about here. If we break below that 955 area, this particular counts off, and maybe not. because maybe this is A, B, C, and we're going to come down and go just below it and then rally again. So small corrections can be made to the actual level, but it kind of looks like 1, 2, 3, A, B, C, 4, or this is the 4 and we're starting to go higher. 1, 2, and we should just blast. That would be the ticket. If it's in starting the third, it needs to regain all of that and move pretty quickly. That would be my key to understanding, oh, we're out of that little 4, we're back up and moving up in a fifth. Our markers to the upside are 100% is 983 or 984, then basically 1,000, and then 1,025. That would be a really good move to finish the first 5 up to get us out of this triangle. That's my goal. I want to see this thing get up and move out of the triangle. That would confirm the triangle pattern and also confirms its completion. So if this is wave E, we can put that barrier down. The first move up and over 1,000 would get us out of the E wave and then putting in the balance in the rest of this. So that would be a good start. And that's about it. Moving averages, a little bit confusing on the daily. If I move it out to the weekly, they're still, look at that, flat, flat, flat. So it needs to get up and go and get these moving averages to move with it. Otherwise, we're going to sit in this box. It's kind of what it's saying. All right, that's going to be it. I'm going to get this posted. And thank you very much for joining me today to review these. And the next will be next week, unless something really bizarre happens during the week. Then I should put together a quick update.